Hello, everyone, and welcome back to the Realtor Advantage. As always, John Petkanas here with RE/MAX Alliance Group, and my partner in crime, managing broker here at RE/MAX Alliance Group, Steve.Zeris. As promised, we've got a special guest here, okay, and we're here to touch on some of those subjects that we're leading up to getting it done. So we have Mr. McClure here, who's going to show us a little bit about how we get the finance and the big part of that going forward. David, thank you so much and welcome to the program.
Well, thank you. I'm really happy to be here, and thank you for the opportunity to join you guys.
Well, thanks. And I know that Steve and I have some questions for you, and with that.
And before we get started, Dave, why don't you tell us about the company that you represent and how you fit into the whole picture here at RE/MAX Alliance Group?
Well, we are Alliance Group Mortgage, and we are a part of Alliance Group Florida. So we not only serve the needs of the RE/MAX Alliance customers, but we also work with home buyers throughout the state of Florida. And we help both with purchases and refinances.
And the advantage, of course, is David is in-house for us. For those who are using RE/MAX Alliance Group, we can just walk right on down the hall, and David can take care of them, and David has a team of people. So there's always somebody here.
It is part of that concierge suite of services that we offer here.
Yeah, and I do want to take a moment to just mention the McClure team at Alliance Group Mortgage. Joining me on the McClure team is my wife Melissa and our son Caleb. So it's kind of a family affair, if you will.
And he said his wife, so I'm wondering who the boss is.
We won't go there.
Don't let her see this.
And we all know they do 80% of the work, right? Yeah, right. Well, that's what they'd have you say. You know what? We'll make it a point to maybe have them on at other episodes too.
Yes.
I think they'd enjoy that.
All right, so we're going to cover a lot in a short period of time.
Mm-hmm.
So I'm going to kind of steer us forward, if you don't mind. First, let's talk about a loan approval versus a loan qualification. Because a lot of folks put too much weight on just an approval letter, which really doesn't have any weight to it unless they've actually done a loan approval. So if you could spend a moment and just talk about that.
Well, there are really two things that people use interchangeably, the loan pre-approval, as you said, and a pre-qualification. And basically the difference is that a pre-qualification is based on conversation, okay? Whereas a true pre-approval is based not only on that conversation, but we have also reviewed your credit file. We've also reviewed your income documentation, your asset documentation, and your employment information. So there's a lot more that goes into a pre-approval, and it is a lot, how do I want to say this, a lot more solid than just a simple pre-qualification.
I know this has probably never happened to you or anybody you know, but if somebody gives you a verbal application and you issue an approval letter based on that information, then after they're under contract, you request the documents to verify everything, and then they no longer qualify.
Well, that happens more often than you would probably imagine.
Yes.
And it's something that we really hear with the McClure team at Alliance Group Mortgage. We do try to avoid that, and we try our best to get as much documentation up front as we possibly can, so that when we write a pre-approval letter, it's something that you can take to the bank, so to speak.
So if I could give advice to our folks out there watching, do most of your work up front, because then it makes everything else so much easier. If you do it in reverse, it's going to cause a lot of stress.
Well, I think you want to be, if you're on the buyer's side, you need to be forth-standing and upright, honest with your financial people, because they're going to find out anyway, so you may as well get it done sooner rather than later, because then it's the difference between an MOU and a contract. An MOU is, I promise to come back and talk a little bit more with you, but then when we get down to the nitty-gritty and start making the sausage, that's when you're going to start verifying whether or not what was conveyed is accurate, and then we can't go further until you basically do that part of it.
That's
Exactly.
All right. Our next topic we wanted to talk about is timeframes on the contract.
Mm-hmm.
Of course, there's two major timeframes related to financing.
Mm-hmm.
One of them would be typically formally apply for a mortgage within 5 days. The other one would be the loan approval period.
Mm-hmm.
And a lot of folks don't understand how critical both of those timeframes are, as well as the loan approval time period. It should not end on closing day. It needs to end before closing day because of the closing disclosure. If you could spend a moment talking about those timeframes.
Well, First of all, a real estate transaction is a fairly complex transaction. Now, I don't mean to scare people when I say that, because a lot of that complexity we as a team handle behind the scenes for you.
Yes.
But there are a number of things that need to take place from the time you actually apply for that loan and to the time you sit down at a closing table, sign your closing documents, and get the keys to your home. So it's, first of all, it's very, very important that that you do get this ball rolling as quickly as possible, because we do depend on third parties to provide certain documentation to us, and sometimes we may have to make a few phone calls to get things in on time.
A little bit.
Yeah. And so the other part of it is that you do have, typically in your purchase agreement, you do have a time frame for a loan commitment. And if you have not obtained a formal loan commitment by that time, then you're at risk of being in breach of your contract.
Exactly.
And that's way more in your ballpark than mine to talk
and of
about.
course that includes an appraisal, that includes underwriting,
Exactly.
Satisfying a lot of requests from the underwriter, helping you do your job. So there's a lot that goes into
Well, I
that.
think the important part to follow up on, and that is, we have David services in-house, but it's inherent on the client to get her done. You can't just say, oh, I got a guy, David's on it. There's stuff that you have to do to help David get his stuff done so that we can all deliver.
And that's why I said it's best if everybody does this up front instead of on the tail end.
And one of the things that we try to do for our customers, and this is really a term that was coined by my wife Melissa, is that up
She's
front,
going to like to hear that.
It is that up front we will supply you with what we call our laundry list. And these are the pieces of documentation. These are the items that we're going to need for you to supply to us in order to get you to that final loan commitment and get you to the closing table. We do our best to collect everything we possibly can up front. Now, occasionally as we're going through stuff, as we're verifying different items, we may need to come back and request additional information. If that's the case, all we ask is that you please just get it to us as quickly as possible so we can move forward.
So we'll cook you the meal, but y'all have to bring in groceries.
Exactly.
All right, the next topic would be cooperating with the lender request. Of course, we were just talking about you may need more documents. It's critical that your phone is close by, meaning anybody's purchasing a house or refinancing or whatever they're doing related to the mortgage. But you have to have your phone close by, or you got to check your email. You've got to make sure that when you send them a message saying, hey, I need this, this, and this, that they get on that and they respond.
You got to respond.
Hey, I'll have it to you tomorrow morning.
Yes, sir.
Or whatever the case is. Before you run into that.
Communication is really the key to everything that we do. Again, we're going to provide you with our laundry list up front. And or I think she actually calls it her grocery list. But anyway, we're going to provide you with what we need up front, and we're going to do the best that we can to collect all of this stuff. But again, if we need something, we're asking for it for a reason, and we're happy to explain that reasoning to you. But it's critical that we get the information that we need as quickly as possible so that we can meet the time frames that you need to meet.
Absolutely. All right. We're going to spend just a moment on types of mortgages, because that is a whole nother episode.
It is.
Because, when you're doing your purchase contract or your offer, some of the information on that contract is related to the mortgage type.
Exactly.
And then the mortgage type will dictate some of the addenda and some other things. So, just kind of breeze through the types real fast for us.
And I know that y'all financial people refer to them as products. So just for you folks at home, better listen to this now.
Well, this is a rabbit hole we could go down and spend all day with. But I think basically the basic forms that we want to look at are a conventional mortgage. Then we have the FHA mortgage, which is backed by the government. For veterans, there's a Veterans Administration loan that provides for 100% financing. So if you are a veteran of the armed services, it's a great option for you. For people who are purchasing in rural areas, the USDA has a zero down program that can be a really, really great program. And then, we're going to also look at things like, are you looking for a 30-year loan? Are you looking for a 15-year loan? What type of down payment are you trying to make? And then finally, we can go into a more of a specialized type of lending, where we might be looking at like some cash flow programs for investors, or some differing type of programs, especially here on the Gulf Coast, where people might be buying a vacation or second home condo and some things of that nature. So those get a little more specialized.
Then you have your fixed versus variable rates.
Fixed
and things
rate
like
versus
that.
adjustable rate. Yeah.
And we have to be careful of that because we don't want to be in another situation where we were back in 2008 with subprime lending
Agreed.
and all of that. So it's important that we have a large list of available products
He meant to do
at
that.
and at the same time not push it too much.
Right.
But that's also why you need a professional who's got some hash
Exactly.
marks on him or her
Yeah.
that can get that over the finish line. Because every different kind of a song demands that you dance to it a different way.
Well, and there's one other thing that seems to come up quite a bit, and that is the difference between dealing with a local mortgage professional and maybe online options. And I can tell you that a lot of times the online options might sound great, but what we're doing here is much more than just a commodities type of transaction, especially here on the Gulf Coast. It's very, very important that whomever you choose to do your loan with, be it through the McClure team or through someone else, that you have someone, that you're working with someone who does have a good local working knowledge, because there are nuances to every area.
And I think that comes down to marketing by these companies online. It's kind of like a fish seeing a shiny object. They don't realize there's a hook there.
Yeah.
So they look good on TV or they sound good on the radio, but are they able to deliver? And many times we've dealt with out-of-state lenders and the deals fell apart, and we had to quickly get somebody else involved locally. And there's something to be said about looking somebody in the eyes locally and being able to work with them and get to the finish line.
And the other thing, and I hate to kind of even think about this, but I've seen instances where we were talking about the contract timeframes that we were talking about, where people have gotten involved with a lender who perhaps wasn't as knowledgeable or professional as they should have been. And those contract timeframes weren't met, and it can actually end up costing the potential buyer a lot of money.
Big time.
Absolutely.
Well, we talked about being a local market expert on the realtor end, and it's just as important on the finance end, arguably more so once you get to that point, because again, there are serious financial ramifications, and you wouldn't want to have to pay for somebody else's mistake in any circumstance, much less when it's going to cost you an awful lot of money.
Yeah,
Isn't that so?
Exactly.
All right. So the next thing we want to talk about.
Wow, what
let there be light.
That was an important point, wasn't it? See, that was illuminating. All right, let's not go there. Leave it alone.
All right. We just go with the flow here. We have no special format. We're just three guys talking.
We're just winging it here.
Yeah,
No, we're not.
The last thing that I want to talk about is the 3-day closing disclosure period, because in the beginning you get your loan estimate, but people have to realize that when you're coming close to closing, now we need a lender to issue the closing disclosure, and they need 3 days to review it before they can close. And a lot of folks want to close right away, but you can't.
Well, that all came about as a part of the Dodd-Frank financial reforms that were enacted back in 2010.
Yes, sir.
So there are some certain disclosure timeframes that we as lenders are obligated to hold to. One of those disclosure timeframes is upfront. You mentioned the loan estimate. After we have the 6 key pieces of information needed to have a complete loan application, we have, by law, only 3 days to issue a formal loan estimate to you. Then now, once we get down to approval and closing, we, as you stated, we have to provide to you a closing disclosure, a minimum of 3 days prior to closing. Now, one of the things that we do here at the McClure team with Alliance Group Mortgages, we utilize, in many cases, we will utilize lending partners who issue closing disclosures at initial underwriting approval. What happens is typically you'll get an initial underwriting approval, and there'll be some conditions attached to that underwriting approval. So this is typically where we may have to come back to you as the buyer and say, hey, your loan's approved, but we need this, this, and this in order to move forward to closing. By issuing that closing disclosure at that initial loan approval, that 3-day clock starts ticking, and once you have submitted everything to us and we get final loan approval, because we've done that so far in advance many times, we can move to closing
And
almost immediately.
Have you ever found yourself in a situation where you needed to amend that closing disclosure, or once it's issued, you're good?
That's kind of an it depends thing.
Okay.
Minor adjustments, no, we can move forward. Now, if something major has changed, I don't know. Let's say at the last minute someone decides they want a 15-year loan instead of a 30-year loan. Now we might have to go back to some new time frames for that. But most of the time, once we've issued that initial closing disclosure, things can roll right through pretty quickly.
Okay. Let me ask you one last question.
Sure.
When we're at the closing table, table just like this, and all of the papers are signed.
Yep.
Now there's a waiting period because we're waiting for what we call a funding number by a lot of lenders. And that simply means that the documents have been scanned, sent to the lender for approval, and then we wait and we all talk and have some laughs while we're waiting for a funding number. There are some lenders that don't require that. How do you fall into that?
Well, again, we are all about being very, very upfront and doing as much as we can upfront. So in the vast majority of cases, 99.9% of the time, when you go and you sit down at the settlement agent's office to sign your closing documents, the money's already there and there is no funding authorization required.
News. Great news.
I hope everyone was listening, because that's a key point right there.
Yeah, that's very, very important. A lot of folks are anxious when they're at a loan closing. They sign the documents, they get their keys, and they want to go. Some folks have a truck that's fully loaded, ready to unload.
It's like waiting in the doctor's office.
Exactly.
Tell me what it is, Doc. Good news?
Well, David, do you have anything you want to add? I mean, we've covered a lot.
I think we've covered a lot, and we certainly want to be respectful of everyone's time.
Okay.
But
we appreciate you coming on.
Absolutely,
well,
David. Thank you so much for joining us.
It's been my pleasure, and it's been fun.
All right.
Glad you felt so, and sure was for us. All right, everyone, well, there you have it from one of the masters in the field. And as always, we want to thank you for joining the Realtor Advantage with Steve and John. Again, want to remind you to like, subscribe, and comment, and share us, and we'll see you on the next one. Thanks, and have a wonderful day.